We're in a market uptrend that's seen very little signs of distribution. In fact, we had just one distribution day on the Nasdaq yesterday, and then that fell off the count, as you noted in the big picture column on Tuesday. It fell off the count due to time. So we're talking about the distribution day showed.
The 5% rule. 5% rule.
Oh, 5%, right.
Yeah.
So we are down to 0 again for both the Nasdaq and S&P 500. So way too early to give up on this uptrend, especially
And
right at the price.
and it really looks, the more you look at this, the more it looks like it could just drift and even nicely close out that gap up. It wouldn't be it wouldn't be the end of the world to kind of form a handle-ish thing, because it is just vertical.
Here's the sell-off below the 200-day, and here's the rebound, and it's not that different in the, I mean, definitely the sell-off was steeper and faster, but the rebound hasn't been all that different.
And if you look at it, that it's almost like when we first came down to try to bounce off the 200-day, that initial upside reversal, that we just fell out of bed when we went underneath the 200-day. And that's what I've talked about before, that when you're underneath the 200-day, in my opinion, I don't have any proof behind this, that I think a lot of algos have that as a sell rule, because it is such a good sell rule that you have, just kind of that competing action of, a lot of selling going on by algos, and then you've got the discretionary folks. And so it just kind of spiraled down, and there's all this fear we didn't know, like, when the economy is going to open and all this stuff. But yeah, it's very symmetrical. That action is almost like this last month is just forgotten, and we're just right back where we were when we first tried to test that 200-day. So I think it's constructive action. I think it looks really good, and more than the indices, the leading stocks are acting nicely.